Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Phil Mackintosh, chief economist at Nasdaq, for an update on the latest COVID-19 news, the U.S. and global economies, and how investors are reacting as we make our way back to a new normal. And Phil, it looks like stocks are taking a pause with a spike in new COVID-19 cases in the U.S. and China. I mean, we're looking at surpassing 8 million today.
Yeah, there's kind of three separate things going on there, though. So the passing 8 million cases today is mostly because of a spike in cases coming out of Latin America, which is just because COVID is now making its way through all those countries and their healthcare systems are not able to cope as well. Brazil specifically has taken a pretty laissez-faire approach to social distancing. And so they've now become a top three country in terms of new cases. And Latin America is more than half of all new cases in the world. The spike in cases in America is actually pretty state specific. So it looks like a lot of the states that opened a little early are starting to see the cases pick back up again. If you look at LA specifically in California, and then Texas, Florida, Arizona and Georgia are sort of the four states that everybody's talking about, just because they've seen a pretty significant uptick in cases since they started to reopen. To put that in perspective, though, we know that Europe's been reopening for weeks as well now, and Europe has not seen a spike in cases. So there's obviously some behavioral differences between how Americans have reopened and how Europeans have reopened, and Europe seems to be doing it pretty successfully. So that's pretty good news for Europe. Maybe we should learn some things from how they've done that and deploy them here as well.
All right, and let's take a look at our next chart here, because prior to the past couple of trading sessions, we really were seeing that V-shaped recovery in the market, not necessarily the economy, but certainly in the market. So some ground has certainly been picked up here.
Yeah, I mean, the market was sort of sideways a little bit in April, May, but it had that strong rally coming into the end of May, early June. And people were talking about the fact that it was getting a bit frothy. The valuations, especially the current year PEs, had got to pretty extreme levels. So it's not that surprising that we've had a little bit of a pause. But last week we saw quite a lot of economists come out and say, look, this is going to take longer than we thought to get over. Be prepared for us to have interest rates close to zero until 2022. Be prepared for no vaccine until 2021. And more, I guess that's actually looking like the new reality is it's going to be a much slower grind back. And so the market's kind of pricing in a little bit more uncertainty about what the return to normal looks like, and a little bit of a longer lead time in terms of getting revenues fully back to 100%. And that's really the reason we've seen a bit more volatility in the last 4 or 5 trading days, as people are just reassessing whether their expectations for getting back to normal are maybe a little bit ahead of the market itself.
We also saw a significant shift in ETF fund flows as well. I mean, materials and financials leading the way. That's a little bit surprising considering the environment that we're in right now.
Leading the way in terms of activity. So this is actually a filter where we look at the ETFs that have had the largest change in assets under management, not necessarily gains, but gains and losses, the largest spike in trading activity, and also the largest price returns. And we kind of combine all those factors together. So this is just a rank of sort of what people are looking at in ETF land. And so what we're seeing in the last week is actually, to your point, materials, energy, utilities, as a complex, really, a lot of those old economy, sort of growth of old economy stocks had a lot of activity in the last week. The lower half of this chart is actually looking at the trend from a couple of weeks ago, where you could see small cap and value had some really big gains, and some asset inflows started to be reversed as well. So as you look at the activity in ETFs week on week, you can definitely see what the wisdom of the crowds is doing. And ETFs are a combination of retail investors and pretty sophisticated hedge funds. So I always think it's pretty useful to see what the smart money is doing by looking at what's active, where the funds flowing in and where the funds are flowing out, and just how much activity we're getting in different groupings of the ETFs, because there's a lot of pretty good thematic ETFs out there these days that let you see where people are placing their bets.
All right, Phil, thanks for joining us as always.
You're welcome, Jill.
All right, thanks for joining me on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.